Hey, welcome back to my Friday Desk Review. Now, this week, Citi, a $2.4 trillion bank, just announced regulated crypto custody and tokenized Treasury rails. Meanwhile, OpenEden's on-chain T-bill fund earned a AA plus rating from S&P Global, matching US government debt. Institutional finance isn't flirting with crypto anymore, it's integrating. So what does that mean for capital, custody, and credibility in this new era? All right, so this is the first out of the three interesting RWA coin projects that I've seen this week that has already that level of traction and acceptance in the mainstream. It's been bought and adopted by institutions. It has on-chain activity, TVL locked. So what I'm proposing in my Friday desk reviews aren't just hype and fluff. It's actually corroborated with on-chain data. So that's really the value that I can share with you in these Friday desk reviews. So to kick this off, this is an interesting RWA coin project where it says that OpenEden's T-bill vault, which is an on-chain fund that actually tokenizes short-term US treasuries, just received, very good news in fact, it actually received a AA plus rating from Standard & Poor's credit rating agency, marking the first time a tokenized product earned a rating equivalent to the US government debt. Now, this is very, very significant because this is the first on-chain yield instrument mainstream investors can actually trust from here on. And that matters for every future tokenized fund. Now, some of the signals and strengths around this product is on-chain yield meets off-chain credibility. It even positions OpenEden as a benchmark for future tokenized yield markets. It actually oscillates currently $8 billion. I'll show you that in figure in the next chart. And the RWA TVL, the actual total value locked, which is equivalent to the market cap that we're familiar with in TradeFi, is rising. It helps bridge the credibility gap between DeFi yield and TradeFi fixed income, right? So let me just jump into a couple of interesting charts. So as I said, well, what's the actual TVL for OpenEden? It's currently a small amount, but it is growing, right? It's over $210 million, which offers an API interest rate. So this is the yield that it currently offers for this fund, over 3.3%. And if you look at its trajectory, according to this RWA.xyz resource, which I encourage you to familiarize yourself, right? This is actually corroborated on-chain data for the RWA coin projects. You can see it started out in October 2023, so 2 years ago. And it's obviously, as with everything, it goes up and down, but you can see there's an exponential rise towards the upside and it's growing. And you can see the actual split of the on-chain TVL capital on the blockchain. So between the four of them, it equates to what I've just shown you up here, to $212 million as of today. And it's set to grow. Now, if I position how much of this 212 million TVL for OpenEden in terms of how it makes up the total 8.3 billion to be precise, of TVL in US tokenized treasuries, you can see it is growing. And if I just hover on that on-chain TVL market breakdown, you can see 11th position from the top of the list. It's 277 million and it's standing as 11th position. So you can see it is becoming, as a result of this AA plus credit rating from S&P, that is going to really mark the bullish push towards the upside for this particular fund. And as I said before, for any future tokenized treasury fund that wants to get into this bandwagon and tokenized treasury space in the broader RWA market. So this is something that we shouldn't lose sight of. And again, if I just compare, well, what is the potential? Because 8.3 billion is a large amount, but it's not that stupendous. But if you put it within the grand scheme of where we're trying to head towards within this global wealth map, which is currently $900 trillion in the US tokenized treasury, only accounts for 8.3 billion out of the total addressable user market of $380 trillion in the traditional bond market. So it's in its early days, it's in its early innings, And slowly but surely, we're going to be demonetizing and converting these TradeFi bond instruments, which are government's debt that's issued in the capital markets around the world. That's going to be slowly but surely being converted into tokenized treasuries on chains. This makes sense because we all know that not just with the US, we're familiar with the US currently has around between 37 to 40 trillion dollar of national debt. So there's always going to be a need to continue to issue its bonds in order to capture debt from the financial markets. And the only instrument that currently they're able to achieve this goal is through issuing bond instruments. Well, this is exactly what Tokenized Treasury is trying to achieve. It's trying to extend the life of the TradeFi bond instruments and just simply tokenize that on chain, because the blockchain provides a much broader access around the clock, 24/7, not just Monday to Friday, which is what TradeFi offers, but also instantaneous transaction settlement on chain, not in a matter of days and weeks, which is what TradeFi does at the moment. And it covers the settlement cost for those transactions is at a fraction of the cost with what we're used to in Swift and TradeFi. So there's a huge potential in tokenized treasuries, and it's very good news to see that Open Eden has been awarded this AA plus credit rating from S&P, and this is certainly going to set the benchmark and the standard, as I said before, for future tokenized treasuries in this space. So very good news. If I move on to the next important article and coin project that I found this week is around Citi. So as the title suggests here, Citi is indeed preparing to launch its own institutional crypto custody platform by 2026, expanding into the tokenized treasury and settlement infrastructure, as I've commented in the previous article, for sovereign clients, corporates, and indeed other funds. Now, what are the signals of strength around this product offering launch? So Citi currently handles a $4 trillion payment flow in its platforms, and it's extending that to cover digital assets. So that is a huge bullish sentiment and signal that we should take into consideration. It also is going to be extending its partnerships with the likes of MasterCard, amongst others, to tokenize the repo and the cross-border settlement. It's also trying to fully operate within the regulatory perimeter under the US bank charter and the SEC oversight. And the signals that tokenization is now a banking product, and it's not perceived as merely a blockchain experiment, which is how it's been viewed historically. So why does this matter? Why am I bringing this to your attention? Well, Citi's integration of custody, payments and tokenized treasuries means blockchain rails are quietly becoming part of the financial system's plumbing infrastructure. This is how crypto achieves institutional scale through infrastructure and not speculation. So if Citi is doing this, this is going to have a massive repercussion effect across the entire banking industry, not just in the US, in fairness, but across the entire financial markets at a global scale. So HSBC, you got Merrill Lynch, you got Bank of America, you got numerous household large banking giants that's going to be expected to replicate what Citi has achieved here. So this is why I'm bringing it to your attention. This is going to be really expanding the breadth of their custody services around digital assets to its clients, whether you're a retail customer or institutional customers. So this is very good news. And then lastly, I want to bring you to the third article, which I think is another very important coin project that you need to be made aware of, which is Chainlink. Chainlink, as I've covered in a couple of videos, and there's one that's going to be released very shortly in my RWA Revolution podcast series, which is where I would suggest that I have many podcasts in my channel. So RWA Revolution is going to include deep dive on particular RWA coin projects at a much more detailed level, right? All from an investor lens perspective, not just from a technical jargon, right? Which you have numerous other channels out there. This is not what this channel is about, right? So coming back to this article, as a reminder, Chainlink is the dominant Oracle network. It's just integrated, as the title suggests here, with Mega ETH to deliver real-time sub-second data feeds on chain. This upgrades makes live pricing, settlement, and proof of reserve verification possible for tokenized assets and RWA markets. Now, what are the strengths and signals from this announcement? Well, it secures a $25 billion plus in smart contract value across DeFi, Treasuries, and tokenized funds. It also helps power data for S&P Global, Swift, and Franklin Templeton pilots. The Mega ETH brings streaming grade speed critical for real-time settlement. And lastly, Chainlink CCIP, which is the cross-chain interoperability protocol, continues to expand as the interoperability layer linking banks, assets, and blockchain. So again, why does it actually matter? Well, as I explained, the gap that native blockchain systems, whatever the project is, right, without real-life data feeds, it is rendered useless. It doesn't have value. And the only way to plug that gap is through oracles and data feeds, which Chainlink for me is like the king of all oracles. So we've got Bitcoin, which is the king of digital capital. We've got Ethereum and Solana as the co-kings, if you like, in the smart contract programmability space. And then for me, as a third RWA coin project, another king would be Chainlink. So really, this is very important because Chainlink's Mega ETH integration makes tokenized assets truly alive, compliant, and indeed interoperable, the data backbone of institutional blockchain finance. And lastly, let me just go back into, as I usually do, the current state of Bitcoin at the moment. So according to this chart, for this week, if we start off the 13th of October, there's been some outflows, capital outflows in the US Bitcoin spot ETFs. So you got 326 million on, I think it was Monday. And then the next day you got 102 net new money coming back in. And then you have another 104 and $530 million outflows this week. Again, this is all the more reason why I just show this to you, because this happens with every other asset, whether it's digital assets or stocks and equities, right? There's always going to be that momentary peaks and troughs and volatility. Once the asset becomes larger and grows, it's currently $2 trillion plus. The larger the capital base of the asset is for the volatility to dampen over time, because it's not the same if you start off with, let's say, 100K as a capital base to now have $2 trillion. The needle within which you're going to move and make a substantial difference in the price of Bitcoin in this case is going to be small and smaller and smaller over time as we reach to that 21 million supply cap limit in the year 2130 or 34, I can't remember, right? We're currently 94% already mined Bitcoins out there in circulation. So I just bring it to your attention that there's always going to be volatility, and this is not a concern. And if you look at the liquidation map for Bitcoin and indeed other digital assets, you can see that in the past 24 hours, as it says here, there's 302,000 traders that were liquidated. The total liquidations comes in at 1.22 billion. So a segment of non-believers of Bitcoin out there who are just really looking at it from a very short-sighted lens, which is something I've always advocated against. It's very dangerous. I've just published and explained why it is dangerous in the yesterday's walk-in special video, which I encourage you to watch. So I'm not going to dwell onto that. I'm not at all concerned about this. And if I just show you the last current price, is currently oscillating. It's October 17th. It's $105,500 per coin. You can see, according to this chart, the actual RSI is closing in 30, which means it's oversold, which means it's going to be a rebound in the price. So I've been showing you that this is a needless exercise, right? If you're really a firm believer and the thesis remains strong in your eyes on Bitcoin, which is the case with me, then we should just simply cut ourselves off from this noise. So please don't get dogmatic about these kind of FOMO type announcements, explanations that you may be seeing in other places, right? So I'm not at all concerned about that, because you can see in its entire history, what I'm mostly concerned about is this view, right? It's going up. So this is all that I'm concerned about, really. So that's all I have for you today. Hopefully you found it interesting. And if you have any additional RWA coin projects that you're aware of that maybe it might be worth me considering and covering in the next Friday Desk Review, as long as it has a level of adoption in mainstream, particularly by institutions, not just retailers, but institutions, and it has a sizable amount of TVL already locked in the coin project that you're seeing. And if you see that they have several news announcements about it, that's really, I'll be very interested to hear if you come across any additional RWA coin project. Just drop them as comment suggestions in this video and I'll explore it and see if it fulfills that criteria. And if it does, then certainly I will add it to the next Friday Desk Review. So that's all I have for you today. If you enjoyed today's episode, please don't forget to hit the like button, to share the video to colleagues, friends and family. And if you haven't done so already, please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, real world assets and the future of finance. So till next time.